Welcome to weekly view on markets. This week, Nifty has kept up its uptrend. Nifty has closed at 17,833 and posted a gain of 1.68% for this week. Broader markets also supported Nifty during this week. Mid Cap Index closed with a gain of 2.02%. Small Cap Index outperformed the market during this week, closed with a gain of 3.32%. I had discussed last week and we will see outperformance in small cap index. And this week we have seen that the small cap index has gone up more than 3.3% during this week. Bank Nifty also performed well during the week with a gain of 2.52%. India VIX, the fear index has cooled off little bit by about 1.84%. India VIX was down and presently India VIX is at 17.71%. So this indicates that we may see some volatility during intraday and during the week in the coming week as well. Now let us look at some charts. This is the daily chart of Nifty, and this week Nifty has closed near its resistance zone of 17,800. So Nifty has, as we can see on the chart, has strong resistance at around 17,800 to 17,850 level. So once Nifty takes off this resistance, we'll see a good up move in Nifty in the coming week. Nifty has support at around 17,400 to 500 level. I don't think Nifty will fall below 17,400. So any dip will be a good buying opportunity. If you look at the Nifty chart, we can see a kind of rounding bottom or saucer bottom formation. This is called saucer formation or a rounding bottom formation. This has bullish implication on the Nifty on daily chart. So Nifty is in a good uptrend. The uptrend is likely to continue. Let us look at the weekly chart of Nifty. The weekly chart of Nifty has given a good up move from COVID lows to up to 18,600. And after that, it has gone into a kind of correction and consolidation for about 6 to 8 months now. The chart structure indicates that after this consolidation, when Nifty takes out 18,600, it is poised for a good up move, or it will start another bull market in India. So now what is going to happen in the near term? I expect Nifty to keep up its upward momentum, and very soon we will see Nifty touching 18,600 of all-time highs and crossing that level in coming weeks. Now let us look at Nifty Mid Cap Index. We see similar kind of structure in the weekly chart of Nifty Mid Cap Index also. The Mid Cap Index is likely to go much higher. The chart structure looks very positive, and this kind of formation, this is called a flag formation or a downward dropping channel, and the chart going above the downward dropping channel with higher volumes is a good indication that we'll see positive momentum in mid cap to continue. Let us look at small cap index. The small cap index also is just crossing the downward dropping channel, and it has closed above this. So I expect there will be more momentum in the small cap index in the coming weeks by looking at the chart structure. Let us look at Bank Nifty. Bank Nifty weekly chart also looks quite in the good shape, and the outperformance of Bank Nifty is likely to continue. If we look at daily chart of Bank Nifty, this has given a strong move. We can't rule out some kind of consolidation on daily chart by looking at this. The all-time high in Bank Nifty was at around 41,500 level. So we are now at 40,800 levels. So this indicates that Bank Nifty is nearing all-time highs, and we'll see some kind of consolidation and profit booking. It is a quite natural phenomena in the market, but the upward momentum will continue in the Bank Nifty. Now, what is happening? Indian markets are going up, and we are seeing correction in Europe and US markets. Many people are thinking that US markets are falling, so Indian markets also may fall. So there is a fear in the market. So let us like to look at the Dow Jones index in US market. See, if we look at Dow Jones Industrial Index in US, it has touched the all-time high of around 36,600, 700 levels. From there, last about 6 to 8 months, it has been correcting. Now it is at around 32,150. So there is around 13% correction in Dow Jones. So during this period, we have seen that Indian markets has posted positive momentum, and our markets, the correction is hardly now 18. Nifty was 18,600 peak. From there, now we are nearing 18,000. So hardly a 1 or 2% correction. So Indian market has outperformed in compared to the US market. we are seeing a kind of decoupling from the US markets. So whether our markets will fall if the US markets fall further. By looking at these last 6 to 8 months performance, now Indian markets are showing more resilience, and any fall in the Indian markets will be a good buying opportunity, and we will see the upward momentum in the Indian markets will continue, maybe with some corrections and consolidation due to the global headwinds. Let us look at the Nasdaq index. See, we see Nasdaq index has also corrected from around 16,600 levels to 12,000. So there is a correction of almost 24 to 25% in Nasdaq index. And Indian markets have definitely decoupled from the Nasdaq index. But if we look at Indian IT index, Nifty IT index, this reflects a similar move compared to Nasdaq. Nasdaq is having all technology stocks, and Indian market IT index is almost nearly following the Nasdaq index very closely. There is a correlation. But the overall market has more resilience compared to the US markets, and our markets may not correct as sharply as US markets. Already we are seeing a sign of decoupling between the Dow Jones and Indian Nifty and Sensex. This is about technicals. Let us talk about some of the sectors. Nifty IT sector has done very well during this week, posted a gain of 3.53%. PSU banks have done very well. They have done well in last week, and this week also they have posted more than 4% gains. Media and infrastructure sectors and all other sectors were in the green during the week, except the auto sector. Auto sector has seen good rally for last 2 to 3 weeks. This week we have seen a profit booking with a correction of about 1% in auto and auto ancillary sector. This is a performance of different sectors during the week. Oil prices have come down below $90 during this week, and we are seeing a re-rating in the oil company stocks. We have seen rally in BPCL, HPCL, IOC, Mahanagar Gas, IGL. So all the oil companies stocks, oil and gas sector is re-rating. If oil prices continue to remain below $90 per barrel, we'll see a good re-rating, because this oil sector has been beaten down on a price to book value basis. They are available at a very cheap valuation. So we'll see some kind of re-rating happening in the oil companies stocks. This week, the PMI index, services PMI index numbers have come. It has come at 57.2. is a very good PMI numbers showing growth in services sector. The services sector was suffering due to the COVID because most of the industries were contact based, like airline industry, travel and tourism, hotels, railways, all these service based industries were not able to operate during COVID time. Now, as COVID has subsided and this sector has started picking up well, so there is a good business growth in the services sector. Exports are growing, and also we have seen industrial PMI also has gone up during this month. So this indicates overall growth in the economy picking up. Direct taxes collections figures for this year compared to last year is up about 34%. Of course, it is some of this is due to the low base impact of last year, but still there is positive growth in the direct tax collections. So one is the income tax collection from the individuals, and second is the corporate tax. So companies are paying more advance tax. When do the companies pay more advance tax? When they are expecting that profits are going to go up. So we can see the corporate earnings will pick up in the coming quarters based on the direct tax numbers, the corporate tax, advance tax. So these numbers indicate that earnings are likely to pick up. So even though there are some global events and all these things happening, the Indian macro fundamentals are quite good at this point of time, and we are seeing pickup in various sectors, and there is good response to the productivity linked incentive scheme, that is PLI schemes offered by government of India to various sectors. So this is likely to push the growth in sectors like telecommunication, infrastructure, semiconductor manufacturing, electric vehicles segment. So this is going to result in better corporate earnings. And also we are seeing good credit demand for the banks and NBFC sector. So they are also likely to improve their earnings on the higher credit growth. So these all indicates that the corporate earnings are going to go up. As the earnings pick up, many sectors like automobiles, cement manufacturing, infrastructure, semiconductor manufacturing, textile sectors, and even pharma sector are offering good growth opportunities. So investors can select good companies. Companies having good corporate governance and strong fundamentals are the ones which are going to give very good profits in coming 2 to 3 years time. Those investors who are not able to understand the sectors and the companies in depth, they can invest in mutual funds with by taking help from mutual fund advisors, and there is opportunity for mutual fund investors also to make very good profits in next 2 to 3 years. This is all for this week. So if you like this video, Please post your comments, share the video with your friends, and give your feedback. Thank you very much. See you next week again.